Hi, this is Melissa with Blockchain WTF, and today we are going to be talking about how the blockchain is going to affect the insurance industry. Filling out an insurance claim is an overwhelming and confusing process. The payout takes time to complete, while the insurance company has to investigate the validity of the claim. If a fire burns down a family's home, they have to file a claim with their insurance company.
F is for fire that burns down the whole town, used for uranium bombs. N is for no survivors.
However, they might not have proof of what was lost or how much those items were worth. I know I always do a walkthrough when I move to a new place, detailing the possessions and the value, but I never remember to update it when I get new furniture or electronics. My dad's been in his house for 35 years. I know he hasn't updated his. And I know most people don't even think to do this video recording in the first place if they ever had to deal with their insurance company. So then, the insurance agency has to try and decipher what they can pay out and replace and what they can't to prevent fraudulent cases. To do this, they have to go based on good faith and assume that the person filling out the claim is telling the truth. That's just currently the way the industry works. The insurer is required to trust that they are being told the truth by the person looking to take out insurance. This is an issue when natural disasters hit and volunteers remove furniture and other debris, which makes it harder for homeowners to prove what was actually damaged and where their belongings are. Applying the blockchain to the insurance industry can help add transparency, maintain the record of evidence in filing claims, introduce smart contracts into claims, payouts, and help with fraud detection, which isn't great for the Frank Gallaghers of the world, or other scam artists. Now, imagine buying a used car with a blockchain-based reporting system. The vehicle manufacturer, parts supplier, original seller, repair shop, insurer, and driver could all act as nodes on the blockchain. This results in a detailed vehicle history report because of all of the individual parts being held accountable. If there was an issue with the muffler, say, you could be able to pinpoint who provided the faulty part. This would help save money in product recall by contacting only individuals with defective parts instead of issuing a blanket recall. Traditional insurance companies currently reduce premiums for cars that have a tracking device in them that are referred to as telematic devices. After September 2014, cars are required to have a black box onboard computer that tracks your data. The new versions monitor 15 different variables and have been used in high-profile investigations. Despite this data being helpful for your mechanic and insurance company, it also infringes on your privacy. Tesla's Model 3 has an internal-facing camera, and GM's Cadillac CT6 has a steering column-mounted camera that monitors the driver for signs of distraction. Supposedly, these cameras don't capture or store video, and some of the data from these sensors never leave the car. But BMW, General Motors, Nissan, Tesla, and Toyota are selling vehicles with data connections that allow for a detailed report of car and driver. Smart contracts can make reimbursement claims quicker, which would save insurers time and money. Since there's so many types of insurance, the blockchain will affect each quite differently. Billions of dollars of life insurance benefits go unclaimed, either because the beneficiaries didn't know that they were listed as beneficiaries, or because they're just overwhelmed with the paperwork that has to be done while they're grieving someone's death. Oftentimes, the companies and government agencies you deal with will not properly shut down the accounts, and you will have to double-check their work. When my mom passed away, the Social Security office killed off my dad in the system instead. It was like a Monty Python scene where I had to take him down to the office and be like, "He's not dead yet."
Ninepence. I'm not dead. What? Nothing. Here's your ninepence. I'm not dead.
Here. He says he's not dead.
Yes, he is. I'm not.
He isn't.
Well, he will be soon. He's very ill. I'm getting better.
No, you're not. You'll be stone dead in a moment.
Oh, I can't take him like that.
Funny and not. But imagine if when a person dies, a smart contract from their insurance company automatically contacts the beneficiary. Once they respond and sign the appropriate paperwork, the money's then dispersed. Policyholders, beneficiaries, hospitals, funeral homes, and life insurance companies would all act as nodes on the blockchain, ensuring that an error like the one that I faced, where Social Security killed my father, doesn't happen because the other nodes would reject the incorrect information. This is causing an interesting change in the insurance industry: peer-to-peer insurance. This is where a group of individuals agree to pay for other individuals' claims, spreading the risk across the group with the intention of cutting out the large company that takes a cut. There is a non-blockchain version called Friendsurance in Germany and Australia that connects customers with the same type of insurance. If no claims are made by the customer or any of their connections, they get a pre-agreed maximum cash back. Blockchain versions of this model would be Vouch4Me and Metashares. Vouch4Me was formerly known as InsurePal and uses social proof endorsements to cut down the cost of insurance premiums. They have started with car insurance and they plan to branch into other aspects of insurance. Vouch4Me has a token built on top of the Ethereum blockchain. Their goal is for diligent and responsible people to stop paying for bad drivers and reduce the frequency of claims. The logic is you aren't going to be filing a fraudulent claim if people in your network have to pay the deductible. Requiring people to put money on their claim might be asking too much from today's short attention spans. However, putting money behind your backing and getting a monetary reward for what you're saying could possibly work. Metashares is based on the Ethereum blockchain and is a decentralized open source mutual aid marketplace. Important to note, they're different than the similarly named Christian insurance sharing platform Metashare with no S. For every new user, MDS burns a token. 10% of the fee will be burned by the platform, while 90% will be held by the platform as reserve capital. Users who find fraudulent activity can report it and gain rewards. This is to help leverage the power of risk assessment and reduce conspired fraud. I understand these token-based systems are going to try and gain adaptation in the private sector before people might go for it on a large scale, but it's going to be really hard to get an industry on board that has a lot of money and power in keeping ridiculous markups on supplies and procedures. So I wish them best of luck. I personally think there's already a lot of tokens, and adding confusion deters people from entering the crypto and blockchain space because there's too many new steps involved in learning how to deal with exchanges and multiple wallets. What are your thoughts on the blockchain's influence on insurance? Throw it down in the comments, hit like, subscribe, and the bell for notifications, and thank you for watching.